Alrighty traders, this is Blake Morrow with ForexAnalytix, and you are listening to the week ahead video for March 7th, 2021. I was just going to say, in case my sister's listening, happy birthday to you. I love you. I can tell you she's not listening, so now you guys know it's my sister's birthday. Anyway, I hope you guys are having a great weekend. I just wanted to say that before I get started, because there's actually a lot to talk about this next week, I want to thank you all for doing a few things. First of all, I want to thank you for sharing this video. If you find these videos, these week ahead videos, beneficial to you each and every week, do me a favor and do us a favor. Retweet it, share it on LinkedIn, maybe on Facebook, wherever you saw this video. Please share it. I'd appreciate it. And please give us a thumbs up. Man, that thumbs up on YouTube, it really makes me feel good. It makes our team that works throughout the weekend editing and posting, and it makes everybody feel great. So thank you so much. If you appreciate it, it just really means a whole lot to me and the team. So thank you so much. Also, if you guys haven't tried out ForexAnalytix, if you're just, you watch the videos, but you're not actually a ForexAnalytix subscriber, check it out. It's only $1 to try it out. $1, you get it for 10 days. You can you get the premium version. You could use the light version if you just want to listen to all the webinars that we have and have the app and everything. But you're going to try out the premium version when you're testing it. And once you do so, make sure you log into the chat rooms too, because when you're in the chat room, which is actually, let me get rid of the data flash. That's upcoming news events. The chat room's right here, next to your avatar. That's where you're going to find myself and the rest of the team chatting throughout the course of the day. And it's probably one of the most active chat rooms. And I want to say just respectful chat rooms that you're going to be in. We don't talk about politics, and we don't talk about, and religion. That's just like that stuff that, it's just a safe place to talk about trades, and no one talks about any other products, because if you do, you get booted, and that's it. It's pretty simple. So anyway, come in and hang out with us. It's great. Okay, now let's talk about this next week, because a lot happened this week. And actually, before I talk about next week, I should actually talk about one thing in particular, and we'll talk about other things too that happened last week, but this is the biggie, right? It was the fall in bonds and the rally in yields. Now, if you were listening to the F.A.C.E webinar, and by the way, if you don't listen to the daily F.A.C.E webinars, you can get to the webinars right here through, if you're on ForexAnalytix, just click where it says webinars. Here's the daily F.A.C.E webinar. This is one that you can register and listen in every single day. It is free. Also, there's a link in the description as well. So one of the things that I was talking about on Friday was the bond market. I was expecting, the bond market to find some support here at the 127% extension, not necessarily because it was a technical extension, which it was, by the way. Obviously, you're looking at it, but the daily sentiment index was very, very extreme. I think it was at 9, if my memory serves me correctly, on Thursday afternoon. So, we figured that even post the jobs report, the jobs report that was on Friday, yields were going to pull back a little bit. They were going to spike and peak around that time, and they did. And we talked about this ahead of the jobs report on the free F.A.C.E webinar. So, you can go back and listen to the recording if you want. So what you'll see in yields is, following the jobs report, we spiked up because it was a good jobs report. We paused and we came down and we're holding. Now, I'm not going to tell you, because I'm not really convinced about this, that the bond market's ready to bounce. But what I told everybody on the F.A.C.E webinar is I wouldn't be surprised if we did this, consolidated, and then maybe continued lower towards the 161% extension, or you'll see 10-year yields get closer to 2%. Eventually, not necessarily tomorrow or next week. I'm just saying eventually we're going to make our way in that direction. That's what I think. As long as the economy continues to improve. Now, that's what happened last week. So, how has the market responded to that? Well, you can really see it in the yield sensitive currencies like the Swiss. The dollar Swiss, whoops, I meant to go to the chart here. The dollar Swiss has spiked up higher, very overbought on the daily relative strength. You can see from the post-COVID lockdown move, the dollar Swiss 99 cents to 87 cents. We're back at the 50% retracement. Okay, almost a 261% extension of the last. You can see it here. Last leg lower, 261% extension, and the 50% retracement. So, you might be asking, would you be a seller here? I don't know if I want to stand in front of that freight train, but I would say this. If you look at the daily chart and you just kind of scroll out a little bit, the low back here in 2015, spike low, post-COVID spike low in the dollar Swiss, underside of that trend line comes in, and you can see we actually tested it one other time back here in September. We're coming right into that in, I would say 93.50 to 93.70. I sure as heck would want to be long going into that, that 50% retracement and that underside of that trend line. But, with yields doing what they're doing, maybe that's the catalyst that actually drives the dollar Swiss higher eventually. But you can see, like I said, the yield sensitive currencies like the dollar Swiss, dollar yen, similar story, have moved up aggressively. And, the dollar yen has done a lot, moved a lot higher than I think a lot of us had expected. And that means that the yen pairs, whether you're talking about the Aussie yen, Euro yen, pound yen, Canadian yen, these currencies have gone higher. Now let's stop for a moment and we're going to talk about the Euro yen. Before I do this, and I'm going to pull this over, I just wanted to say I'm filming this video a little earlier than I normally do, but the analysis that you see on ForexAnalytix, like the basic technical analysis, when you're reading the basic technical analysis, typically the end of day analysis throughout the course of the week is going to be my analysis. So the daily charts that you see here, and you read the end of day analysis. Okay, that's and you can see this was March 4th, which was Thursday. Looks like we're going towards 118.66. That was on Thursday. And there was the chart, all of that analysis, that is written by me. Over the weekend, some of my team members like Steve and Paul Franco, and they're out there working on the analysis over the weekend. So it's all freshened up by Sunday. All right. So I'm not going to go through these charts because they're not freshened up for the weekend just yet, but they will be. So that's why I tend to go to TradingView so I can draw on the charts. And by the way, if you're using ForexAnalytix, you can actually go to the live charts here, and you can actually go through them right through our system. I just keep them. We keep it on this color scheme for our team. So this way our team's using all the same colors and whatnot. That's why I actually have to go keep the charts over here. Now, I want to talk a little bit about the Euro yen. Not necessarily because, it is because of the Euro yen, but I actually want to talk about it because of the ECB meeting that is this Thursday. So that's probably the most important event of the week. Next week is going to be the ECB meeting, which is on Thursday, March 11th. Now, we do have a few other events that are pretty important. You have inflation data in the U.S. on Wednesday. You have the Bank of Canada rate decision on Wednesday. Then you have Canadian employment, which we're going to take a look at the Canadian too, because I think the Canadian is definitely worth looking at as far as the charts go. But the reason why I want to talk about the euro yen is I was just showing you the dollar yen and how overextended it is, right? It looks almost overbought. And let's think about that for a second. If bonds stabilize and yields just, let's just say, consolidate, they may not go down too much, but maybe they, backfill a little bit, meaning that, if you're looking at the yields, maybe we see something like this in the 10-year, just to give you an example, kind of like what we got last week, pull back, and it consolidates, right? Before continuing higher in the 10-year. So what happens to the yield sensitive currencies that are, like the euro yen or US dollar, Japanese yen and whatnot? Well, obviously the euro yen is going to have more to do with probably the ECB meeting, but that'll take, if yields just stabilize, that's going to take the upside pressure off of the yen pairs, or in other words, the yen, which has been predominantly weak as yields have moved up globally, that might stabilize a little bit. So the euro yen would have the flexibility of actually moving a little here. Now, the reason why technically it's so important is because if you go out to, and I'm going to come back to this daily chart, but let's go out to a weekly chart. Now, if you look at the highs from way back in 2008, 2009, to the spike high here in 2014, and where are we now? Right at that key resistance. That all comes in around 130 and a half, 130 and a quarter, which you can see the 161% extension of of basically 2020's dip here comes in at 130.35. So what am I pointing out? Well, 130.35 is going to be really key resistance, very key resistance. And if yields actually consolidate a little bit, or maybe even pull back, it might give the euro yen or the yen pairs the ability to move down just a little bit. Now, why would the euro yen move down specifically? Well, we do have the ECB meeting, and one of the things that obviously everyone globally is watching, and we're watching central bank response, is how central banks are going to tackle this issue of rising yields. And, the ECB might be a little bit closer to some sort of quote unquote yield curve control than the Fed. And that's why this Thursday's meeting is going to be extremely important to listen to what Christine Lagarde says about rising global yields. And let's see if her buttons have been pushed regarding that. So I guess the best way to look at the euro yen at this moment is pretty easy for me. A break above 130, let's say 130.50, it's pretty bullish. But being here at 130.50 or 130, let's just call it, the risk reward might be for a short with stops above the highs, or if you want to just play it safe going in this next week, safer meaning not having a position, you wait for a break below 128 and change, maybe to 128.50, or if you just really want to wait for a big break, a big and confirmed move, you wait for a break below the 127, 10 or whatever it is, oops, I didn't mean to move that. But you get what I'm saying. This breakout point, you wait for a move back below here, and then you have, the maybe the opportunity for a much bigger move, knowing that we've popped out of this this range right here, right? Okay. So that's what I'm thinking about the euro yen and going into next week. So let's talk about the dollar Canadian. And I want to show you a chart that's pretty important to me. All right, here's your daily chart of the dollar Canadian. And let me zoom out a little bit. This is what we call a descending wedge. And what you'll notice there is an inverted head and shoulder pattern, which, by the way, head and shoulder patterns, I know some people do, and I think incorrectly, but a lot of people look at head and shoulder patterns as continuation patterns. What I mean by that is they'll see something like this. They'll see a let me draw this for you. They'll see a move higher. We stop. And then they'll see, oh, look, it's an inverted head and shoulder pattern, and we're going to go up. And that's after being in an uptrend already, right? I don't look at them like that. I actually, let me delete this. I look at head and shoulder patterns, or in this case, an inverted head and shoulder pattern, as a reversal pattern after a prolonged move. So this is a prolonged down move. We now have an inverted head and shoulder pattern. That means that a move above 127.50 is bullish. So right here would be bullish. Now there's a lot of things that could spark a move of the US dollar Canadian higher. Not just technically getting above the 50-day moving average, or getting above the neckline of the inverted head and shoulder pattern. There's not just those technical things that could really move the market, but also when you're looking at the dollar Canadian and thinking about what's going to happen this next week, you've got the Bank of Canada, which most economists see that the Bank of Canada's next move is going to be tapering bond purchases. So we have to see, is the Bank of Canada this week closer, any step closer to possibly tapering based on economic rebound. That's one. Then that happens actually on Wednesday, and then Wednesday we also have CPI on Wednesday, but that could be a dollar mover. But on Friday, we have the Canadian employment, and obviously those are both events that could actually move the needle in the dollar Canadian going into this next week. Also, one last thing regarding the Canadian would be crude oil. And, crude obviously has been very strong following the OPEC meeting this week. You'll notice that the relative strength, it technically is very divergent. We're hitting highs of the 2019 spike highs. We basically closed at those highs last week. Now, the problem that the dollar Canadian has regarding crude is if crude starts to show any type of weakness after this prolonged move higher, that's going to weigh on the Canadian. So that means the dollar Canadian could actually bounce, or we could see some Canadian weakness if crude weakens as well. So there are a few things that can move the needle regarding the Canadian going into this next week. So all in all, guys and gals, it's going to be a action-packed week this next week. Remember, U.S. inflation data on Wednesday. We have the Bank of Canada on Wednesday. We have the ECB on Thursday, and we have Canadian employment on Friday, amongst other, economic data events that are going to be happening throughout the course of this next week. But like I said at the beginning of this year and the end of last year, 2021, data is going to matter, because now central banks are going to have to start shifting, or expectations are going to start shifting. So you're going to see more volatility in currencies based on bank, economist, institutional expectations of shifts in rates and policy moving forward. So the good news is, as a currency trader, we're due for some more volatility. So guys and gals, I want to thank you so much for tuning in today. If you really enjoyed this video, you think it's going to be beneficial to you going into this next week, give us a thumbs up. I'd appreciate it. Our team would. And I want to thank you for listening in. My name is Blake Morrow. Have a great remainder of your weekend.